Hey, good morning, everyone. It is a busy day today with several big earnings announcements. I wanted to get to that and start talking about the stock market, share that with you. I wanted to dig into the big earnings that came out from JP Morgan, Wells Fargo, BlackRock, Fastenal. And I also wanted to talk about Tesla, Uber, which Tesla had a big reveal last night and wanted to cover that. And if we have a little bit of time, I had a couple of extras that I wanted to throw in there, but we'll see. We'll see how much time I've got this morning and see how far we can get. Um, Wanted to invite everybody to the different ways where you can engage with this community of stock investors. I invest long term. My objective is to find stocks that are going to double in value in the next 5 years and do a lot of intrinsic analysis. And I think a good community of investors have gathered together and we communicate primarily on Discord, which is a great app. It just has a lot of scammers. Be very careful on Discord. I don't think that's news to most of you, but just be very careful on there. And you can join our Discord using this link. And I believe I have all these details are in the description of the live stream, but I invite you to go there. I'm also on Twitch. You're probably seeing me on YouTube. I'm also on Facebook and Threads. So join in. Be great to have you. I know I've got a bunch of regular community members that just actively look at the market, try to understand what's going on with individual stocks and or sectors and or the whole market. And I invite you to become a member of our community as a paid member. It just gives you greater access, more value overall. Specifically, the advanced investor is where you can attend the weekly investor call we have on Sundays. There's also going to be a workshop on Saturdays. And as I stream, I've got in some cases, 50 some odd, chat messages, and I got to be selective of where to go and which stocks to see. And really the priority is given to paid members so that I could really handle their questions and make it worth everybody's or their while as being a paid member. So that's one of the perks that you get out of being a paid member. So please consider that. If it's something for you, I appreciate you checking it out. All right. So our markets are going to open up here. They actually are open. They opened up flat. We'll see what they are going to do a little bit later. NASDAQ's a little down. S&P's a little up. Dow is up a little bit. The big earnings that have coming out are in the financial space. And that's where I'm going to spend a good portion of my time looking at these big banks that announced. I'll give this a few minutes to kind of get some good data in there. But JP Morgan is the biggest market cap bank and overall financial services company on the stock market. And I think that's the one that I'm going to start with. And I'll dig into it, share with you what I see in JP Morgan. I was a JP Morgan stockholder for like 5 years. It was a very good investment. I have very good things to say about JP Morgan. It is an expensive stock. Usually companies that do great, their stocks really go up. So that's not a big surprise. And I'll share with you, I'm going to compare JP Morgan versus Wells versus Citigroup and share with you what I look at in a bank. Banks, you have to treat differently as a long-term investor. When we look at like Google, Alphabet, or Tesla, I look for free cash flows and earnings per share. That's like 80, 90% of companies. Those are the two fundamental measures that I look at to see, is that company really, really valuable? But banks, they're different animals because they're making money through net interest margin. And it's just, it forces an investor to look at it from a different perspective. And I'm going to share that with you. Um, it can get quite complicated, so I'm going to try to simplify it, but we'll get to it. So we'll go over JP Morgan, Wells, Citigroup to get started. And then I'll talk about Tesla, and I'll look at Uber while I look at Tesla, because I think Uber is a related story. And then just to round things out, we'll look at BlackRock and Fastenal. So everybody, thanks for joining. I see we've got a good number of people on this morning. It's Friday. It's Friday, man. We've got a weekend coming. I'm looking forward to the weekend. Tomorrow, I've got a football game that I want to watch. I'm excited about it. I think it's going to be pretty smooth, tranquil weekend. I'm looking forward to it. All right, so let's take a look at JP Morgan. So one thing that, the expectations in the banking sector have really come down. And JP Morgan, their stock is up 3.65%. And once I show you their financials, I think it certainly makes me scratch my head a little bit. Like, why is your stock up when these fundamentals look like that? But let's take a look at them together. So this is a big cap company at $605 billion. And the PE ratio is nice and low at 12, forward PE at 13, pays a dividend of 2.32. Analysts think it's a good company. It's a buy, but it's fairly priced, just with a 1.49% discount on this stock. So it's a fairly priced stock based on earnings per share. Now, when I look at a bank, I look at the revenue. That's really important to see. Is the bank growing? Are they doing better? Are they expanding their loan portfolio? And let's take a look at that. So net interest income, this is the lifeblood of the bank. And it has grown substantially from 2019. Okay. And I don't remember them making any big acquisitions. So their book has gotten much larger, and they, made more loans. You can see their loan portfolio really go up. So those things look good. Net interest growth is there. Okay. But once we get down to revenue, here it is. And I'm going to look at the quarterly. The quarterly will show you what is most recent, what's going on with the business right now. And you can see that there is, if you compare Q3 versus last year's Q3, you have revenue that's declined a little bit. Okay, so actually went up a little bit. Sequentially, it's gone down 8 billion. So from Q2 to Q3, it went down about 8 billion. So that's a little bit of adjusting to lower interest rates, I believe. If you're, I think if somebody's on either they have a big loan as a business, they're trying to refinance, or a home, they're trying to refinance so that they can get to a lower rate. So that makes sense that, hey, there's less interest to be had if interest rates drop. So that's the adjusting that this bank has to do. So that's what's going on. And that's why I thought, boy, the stock price is really appreciating. But I see that the net revenue did decline from sequentially. So that is going on there. So I look at revenue, and JP Morgan's the gold standard within banking. These guys, there's a reason why there's 605 billion. Now, the measures that I look at for a bank is book value and earnings per share. So we're going to look at those two, which is different than most other companies. I look at free cash flows and earnings per share. So with regard to book value, stock analysis does give us book value per share. And here's what is impressive about JP Morgan. The book value, I want it to increase over time. And JP Morgan's probably a perfect example in banking of how you're supposed to increase your book value. So no giant surprise. That's why they're valued so much is other investors really like the company too. It's a very, very well run bank, very well run company overall. It's the leader in their space. So much that I really like the stock. I owned it for a long time and more recently switched horses. And I'll show you the horse that I switched to and the reasons for it. So JP Morgan, I mean, I can't argue with the stock rise. I think the 3.37 is because these guys are like the Apple of their space. They're just the best operator. They really handle their business. It's fairly priced, and now it's being priced at a slight premium. Not too bad. A lot of analysts cover it. 15 analysts cover this stock. So plenty of analysis out there for JP Morgan. And JP Morgan has this year, they're supposed to do $18.44. I think the declining interest rates and so forth are going to reduce profitability in 2025. So that's expected to go down about 6.65%. And then in 2026, it's going to go back up. So I'm going to say it's going to be flat, right? If you start at 1844 and then you end up with 1862, I call that flat, but they're going to be profitable. And their PE is going to go up a little bit because earnings per share is going to go down in 2025. So the company is fairly priced according to earnings per share. Their book value looks okay. But what I like to do, especially in banking, is compare JP Morgan to its peers. And which one's the best buy right now? Which one's the best stock to hold right now? That's really the overall question that I ask in this space. Before I jump to that, let's take a look at Wells Fargo. So we went over JP Morgan, good stock. Wells is also going up about 5%. It's really impressive. Go Wells Fargo. They are a $196 billion bank. Their revenues are $77 billion, and they pay a dividend 2.77. Analysts think it's discounted by about 6%. And again, we're going to look at a couple measures. Let's look at revenue, book value, and then the valuation based on earnings per share. So when we look at revenue, here's the revenue line. Sequentially, Wells, added a tiny bit of revenue. They went from 77.2 billion to 77.8 billion. So that's good. Now, when you compare this year, and I'm sorry, I've got to look at the quarterly. That way I know exactly what's going on with the most recent quarter that they just announced. So revenue sequentially went down just a tiny bit, went down about 150 million on a $19.45 billion number. All right. And then when you compare Q3 versus Q3 of 2023, revenue went down about 1.83. So the banking industry is adjusting to lower interest rates. As interest rates drop, a bank makes money when they lend out money and then they charge people interest, and the net interest margin being the bank is paying a certain amount. But maybe they pay it to savings account holders, and they pay a rate on those savings accounts, CDs, certificate of deposits. They issue out bonds and they pay on those bonds. And that difference is how they make money. So that is what's going on with Wells Fargo. All right. So So I'm checking in on the comments. I haven't seen one comment, which is kind of strange. I usually see a couple. I wonder if I flipped one of the switches incorrectly when I was setting up the live stream. But if anybody can just put anything in the chat, I'd appreciate it just to see if it works. And all right, so Wells Fargo is humming along. The stock is doing well. Let's look at the profitability just out of curiosity. Profitability. All right, Omar, good morning. Cool. The chat is working. Okay, so the bank is profitable, which is good. They're less profitable than last year. I think they had better net interest margin. The differential between, hey, we're going to lend out money at this rate, we get to borrow it at this other rate, which was lower. So that is interesting. Okay, so the growth of the bank, we understand why it's, Wells Fargo is declining a tiny bit. It's the interest rates, not that they're doing something bad. Now let's look at book value and see how they've been managing their book value. Book value is a very good way of valuing banks. So that's why I use it. It represents how much value they're creating out of that bank. And Wells Fargo has not been as impressive as JP Morgan. If you go back to 2019, it was at 40.33 book value per share. And it's gone up to 46. It's going in the right direction. It's just not that much of a rise like JP Morgan had, which was pretty impressive. So that's interesting. So Wells Fargo doing well today. The stock is up 4.1%. And I'm going to compare Wells Fargo, JP Morgan to Citigroup. Citigroup is up 2.5%. Citigroup these are three big banks. There's, I don't know, about 4 to 6 big banks in the United States, and Citigroup is one of them. And they are also a pretty good market cap. They're the smallest market cap of the three companies that we're looking at. They have good revenue amounts, and analysts believe that it's better discounted. It's got a discount of 11.85%, and they pay a higher dividend. Their PE ratios this year, it's 17.5, but I'm already looking at next year because we're so close to 2025, especially with Wells and JP Morgan. They just announced their Q3. So we're on to Q4. Most investors are already using 2025 figures because that's really the year that you have your eyes on. All right, so Citigroup is there. They haven't announced. They're going to announce I think on Monday or Tuesday. And so I'm going to go straight to their book value and show you book value. And then I've created a sheet to kind of compare the three banks so we can take a look at it. Hey, Mr. N. Kiter, you want to look at BlackRock? Cool. That is coming up. After I do the banks, I'll jump over to BlackRock. Hang in there with me. So book value. So here's book value. You can see that Citigroup has gone from 82.9 up to 98.7, which is a good rise. Again, not as impressive as JP Morgan, but it's also not as expensive a stock as JP Morgan. So I want to buy stocks that are really going to appreciate in value. And if we look at the appreciation, let's look at the appreciation real quick on all three. And I like seeing comparisons on Google because Google lets me add a couple of stocks, which I can do. All right. So when we look at the 1 year, they're kind of tracking each other. Let's take a look at down here. It looks like Citigroup's done the best in the 1 year, Wells Fargo second place, and then JP Morgan third place. But they've all done really well. So that looks really good. When we look at the 5 year, a little more long term, you can see that our friends at JP Morgan are just, the best in the class, right? which is why I own the stock. And it did really well, but I decided to get out because I thought that Citigroup presented better value. Like, hey, this bank is operating well. It has a lot of the characteristics that I want to see. And I decided to switch horses. It's not about, where the stock's been, it's where the stock's going to go. And in my opinion, I think Citigroup is going to have a more prosperous future because the fundamentals support that particular thesis. Let me show you a sheet. So here's the sheet I created. Here's JP Morgan, Wells Fargo, Citi. And here's your stock price. This is current. It updates automatically. It might update every 20 minutes, but it should update automatically. And then here's the book value per share. And this is 2023 figures. So I put those in here. And the greater the book value per share price, the better value I'm getting as an investor. And you can see that Citigroup presents very good book value to stock price, far better than JP Morgan. JP Morgan has that impressive upward, chart, but it has a very expensive sticker price. Like, I have to pay a lot for JP Morgan. Now, as a stockholder, I liked that JP Morgan was going up every year. I liked that very much. But the stock is fairly priced. This is a little old because I just entered these numbers, but you can see that based on book value, to me, Citi presented a better proposition as an investor. So I went with Citi. And I'm glad I did so. The stock's performing. It's paying a better dividend than JP Morgan. So mission accomplished. And the earnings per share also present a better discount. So in each industry that we invest in, right, there's choices. Typically, there's a lot of choice. In some cases, there's a few choices because maybe it's a new industry or maybe there's just such a dominant force. I'll use e-commerce as an example. E-commerce is really dominated by Amazon. Everybody else is playing for a distant second. Amazon's taking 80% of e-commerce volume. Everybody else is, battling to get a piece of the remaining 20%. That's a different animal. In banking, there's big banks, there's medium-sized banks, there's tiny banks, there's banks of all sizes, there's credit unions, there's all kinds of competition. So there's plenty of companies to compare as peers. So JP Morgan is doing well today. They had their earnings. I think to see the stock behave the way it's behaving, it creates a sense of confidence the market's going to rise nicely because these are the big banks. There's a lot to be said within these banks. It's like, if banks are doing well, that typically means to me that the economy is doing well. When the economy does poorly, it typically means the economy is going to struggle. And banks are more old school than they are new school. So the Dow is rising ahead of the NASDAQ. That makes sense to me. The economy seems favorable. So I think the Russell is catching a little bit of tailwind, although that Russell can fluctuate on us. So not a bad day. I'll take this for a Friday. Old school stocks rising, new school stocks holding their gains. They've been rocking and rolling for 2 years. So that's fine. That looks good. So that looks fairly good. So we just went through banks. We covered 3 big banks. The other big banks out there are Bank of America, as an example. And I just didn't want to boil the ocean and bring in like 20 banks into an analysis. I just thought it'd be a good start and finish. So nice work, JP Morgan, up 4%, quality stock. Can't argue with an investor wanting to get into the stock. I would just say this is banking. JP Morgan, as an example, has been around for more than 100 years. I think, when were they established? 1799. They've been around for a while. So this is a really old industry. So switching horses is quite easy because there's just so many choices. And our friends at Wells Fargo, they're doing well, up 5%. Wow, very nice. So, and it might be the prospects that the banks are going to face in 2025. You have interest rates, I think, are going to stay somewhere where they're at now. I don't think the Fed should be in a giant hurry to lower interest rates really fast. So I think it's going to allow them to capture more revenue because interest rates will stay a little higher. And we'll see how things go for Wells Fargo. They're having a very good day on their earnings day. So good job. And then Citi is just going along for the ride. 3% up 3%. Nicely done, Citi. We'll see how that works. So, all right. So we went over these big banks. Now let's go over BlackRock. Mr. N. Kiter has shares. And before I move there, I got a JP Morgan comment. So if you're a history fan, I encourage you to study, JP Morgan, the person. He was a titan of his time and a pretty interesting guy. All right, BlackRock. So BlackRock is a very successful financial services company. Let me kind of read their description. They do a lot of things, but let's read it. So BlackRock is a publicly owned investment manager. The firm primarily provides its services to institutional, intermediary, and individual investors, including corporate, public, union, and industry pension plans, insurance companies, third-party mutual funds, endowments, public institutions, governments, foundations, charities, sovereign wealth funds, corporations, financial institutions, banks. It also provides global risk management and advisory services. So this BlackRock can do things like acquire portions of a company, privately hold companies, provide liquidity to companies, loans, and do things that are very desirable to them, because usually when they do those things, they expect they're going to have a very high rate of return. They're a little bit of a kind of, instead of being a bank where they have a lot of regulation, they're more like a capitalist. They're a free agent, open to be hired to provide financial services, partner with a lot of these institutional investors, help them get a higher rate of return by bringing in alternative assets that are usually reasonable to have on their portfolio. And I think Kiter brings up that they also issue out ETFs, most definitely. So they're managing ETF funds and all those good things. So very strong company. If we look at a couple of things just real quick, PE is higher. You see it's much higher than a big bank because these guys can drive better profitability. It pays a dividend of 2.14%. And they're fairly priced according to analysts based on earnings per share. The stock is going up. So let's just read the headlines on some of the earnings announcements. So their assets hit a high 11.5 trillion. So assets under management. So that's been growing. Looks good. So looks like their ETFs are really working. I can understand why. I see their ETFs. I don't own any of their ETFs. I think they charge a little bit more as a management fee. And I really focus in on management fees and try to keep management fees to a minimum. So, so it's a strong buy according to analysts. Let's take a look at their financials. Let's take a look at their revenue growth. This is June 30th. That seems a little old. I think I'm gonna have to go to their investor page. So no big deal. We can do that. So I want to see what their revenue growth is looking like. And See if I can get to their investor page. So investor relations. Okay, so here's their earnings release. They haven't released their 10K. Okay, so they had a lot of inflows. That means a lot of money's coming in, institutional investors, people like us, investors buying into their ETFs, all that good stuff. So where are they going to show me their revenue? And bear with me as I kind of assess what I'm looking at and see where I can see revenue. So their assets under management are doing great. Okay. So here's our total revenue. Total revenue in for the 3 months, very good. They are 5.2 billion in revenue for the third quarter of 2024, and that went up from 4.5. Very good growth. So just doing the math in my head, that's 16, 17%. So that's very good. I might be a little high. Maybe it's about 15%. And if you compare sequentially, they also went up. So you look at sequentially the Q2 number compared to the Q3 number, they went up from 4.8 billion to 5.2. So what they're doing is working. Revenue is really expanding for BlackRock. And revenue is the lifeblood of the company. If I see revenue growing, I gain confidence that the company is doing good things. Their customers like their products. They're buying more. More customers are coming in saying, I like what BlackRock is offering. They have more customers. So they can expand the number of products they can offer because they have a good brand. That, I think the investing community really likes what they have to offer. I think they're offering good products that the investors really like. So very good job, BlackRock, on your revenue. So I'm good with revenue. And we come back to financials. Now BlackRock is it's kind of like a bank, and it's kind of like, a company like Meta or Google. So I'm not quite sure how to value them. At this moment, I don't own a company like BlackRock, but their operating cash flows is good, 4.5 billion. They have very little capex because they don't have to buy a lot of stuff. They might need to buy servers and technology and office furniture and stuff like that. Free cash flow is 4.25 billion. This company is growing nicely. It's a really good quality company. So based on free cash flow, I mean, I would be a little short of saying it's worth 146 billion. I'd probably be at like 130 billion if I looked at free cash flows and put them into my model. I'm going to be around 130, maybe 120 range. But it's a quality company that's, I think, got good momentum. 54% over the 5-year, up 137%. Quality. It's a quality name. These guys are probably going to keep going up in value because they have just a very good brand. They have good momentum. They're going up in value. All those things are in play. When we look at their forecast, what are analysts saying about the company? 13 analysts cover the stock, and the most pessimistic is at 837. The most optimistic is at $1,150 per share. In summary, on average, they're saying it's fairly priced, just priced a little bit at a premium. And today's stock price went up 3.79. Their earnings per share is going to expand. In 2025, it's expanding by 11% and then by 13% in 2026. Very good. Very good. Revenues expanding, profits expanding. Quality bank. I'm sorry, quality financial services company. BlackRock, quality. Is this stock going to double in value? It could over the next 5 years. They just have to keep doing what they're doing. They're doing a lot of good things. They keep getting into spaces that there's good demand for their financial product. So that's BlackRock. It's a quality company. I have a good number of financial services stocks. I've done well financial services, especially for the past year, 12 months. Last year, we had the big scare that Silicon Valley Bank, you know, how they had a run on their bank and Silicon Valley Bank went under. And that created a lot of fear within banking and financial services, and it created a big opportunity. And I bought into that opportunity and did well. As I look forward, since the economy is going to be doing well, people are going to be employed. I think financial services is going to continue to work. And I think BlackRock, as well as the banks I covered, are going to do well in 2025. So it's not a bad place to play. You have a lot of great choices within financial services. You have companies like BlackRock that are doing a variety of things, you know, being a big asset manager through their ETFs, providing services to institutions, all kinds of interesting things that BlackRock is doing. So, Mr. N. Kiter, are you a stockholder in BlackRock? So BlackRock owns ETFs. Cool. Tomas, buenos dias. Happy Friday to you, sir. Thanks for joining. Z Eduardo, thanks for joining. I appreciate it. And Sergio, I don't know if I've said good morning, but good morning. Very nice for you to join. I appreciate it. All right. So went over BlackRock, kind of had a list of things that I wanted to get to. So we went over JP Morgan, Wells Fargo, BlackRock, and we went over Citi. There was a big story with Tesla. Let's kind of talk about that. And it's one more bank in here, the Bank of New York. There's a lot of banks. Banks tend to announce first, and it's pretty incredible. Their accounting teams can crunch the numbers and get them ready. But this one's 55 billion in market cap. And I know that JP Morgan's like the gold standard. Wow, man, really good bank. But I made a lot of money on US Bank and bought it, sold it, made money. Bingo. I'm good. I made like 50% return in 1 year on a bank, and they paid me a dividend while I owned it. Now, I got out of it because I'm like, okay, this is going to be good, but I don't know that it's going to be great forever. And I think when you look at mid-sized banks, there's an opportunity there because usually mid-sized banks are priced lower if you look at their ratios. And it's an opportunity. If the economy is going to be good, mid-sized banks are going to do well. So look good to see Bank of New York Mellon is doing well, 2%. These guys are kind of one of the bigger mid-sized banks. US Bank is also a pretty good bank to look at. I own that. Right. I'm going to wait Fastenal to kind of for a little bit later, but Tesla had a big, production last night, and it looks like the market's not buying it. And this is, if you follow Tesla for the last 20 years, I was a Tesla stockholder for a long time and bought in early, bought in 10 years ago and owned the stock for some time. And I could tell you that, when a company's like embarking on a brand new kind of technology and space, that is super impressive that Tesla was able to pull off everything that they've done. Super impressive. Um, and I'm a fan of what they've accomplished. But I stopped being an investor when I really started to really examine the fundamentals. The fundamentals tell me a different story versus the, you know, awe-inspiring, you know, moonshots that they continue to communicate. And they just announced their robo taxi kind of ideas for China specifically, because I don't think Tesla's even close to going to market here in the United States. The leader of the pack there is Google Alphabet with their Waymo car service, which is already active in the United States in partnership with Uber. And I think um, Waymo's partnered with both Jaguar for the vehicles for internal combustion, and they just partnered with Hyundai, where the all electric SUV that Hyundai produces, they're going to be kitted with the Waymo equipment and ride hailers that are comfortable with a robo taxi can hail an electric vehicle. All right, so so Tesla announced their big plans there, and I think the market knows Tesla. They're gonna talk big, and it's gonna take a while for them to deliver. They're talking that hey, their robo taxi is gonna be phenomenal. It's gonna do a lot of things, but it's under a backdrop that Tesla is not the leader right now in robotaxi. In China, there are Chinese companies that are already actively giving rides to people in their robotaxis. So they're ahead of the game. Tesla is going to join the game, but they're not creating the space. They're not the leader. In the United States, Tesla for robotaxis is behind Google Alphabet. And Google Alphabet's been really developing their robotaxi, their self-driving car for 15 plus years. They've had it operational for 10 plus years. Operational being those cars are being driven, they drive themselves for a long time. And you think about the learning curve there. You think about the confidence level that governments are going to have. They're going to have a lot more confidence in the Waymo platform because they can show real life data. It's not theory. Hey, this is how safe our cars are. This is what it's going to be, uh, uh, for your city. Because we've been operating in Phoenix. I think they've been in Phoenix for more than 10 years. They've been in LA for about a year. They've been in San Francisco for a long time. They've been in the Silicon Valley, no big surprise, for a long time. And they're opening up other cities in partnership with Uber, as well as their own ride hailing service. I think that Google Alphabet doesn't want to be a ride hailing company. They want to be a technology company that provides the platform, and then Uber can use their huge user base and it wants to hail rides, and they don't care whether it's a person in it or a self-driving robotaxi. I'm looking to ride in this self-driving robotaxi. I think it'd be fun. I got to check that box, but I don't live in an area where it's offered. As soon as it's offered, hell, I'll take a ride just to take a ride. I don't care if I'm like just kind of wasting a little bit of money, but I think it'd be fun to drive in a car that is just completely autonomous. That'd be pretty interesting. Okay, so Tesla went down 7.62%. I value Tesla. I come nowhere near their market cap. $700 billion is a ton of money. And some people view Tesla as like a technology company that is going to do just about anything they set their minds to. And yeah, people have a right to feel that way. I view them as a car company. Predominantly, their revenues are cars, and they're seeing a lot of competition. The last time they had a big kind of announcement for their business was the Cybertruck. And man, did that take a long time to get to market. They promised it like 5 years ago, and it finally came to market like a year ago. Finally. They had it on the stage, if you remember, and they were like, "Oh yeah, it's bulletproof windows. I'm going to throw this ball bearing against the window, and it's just going to bounce off. It's not going to crack." And they threw it, and it smashed it. And then the Tesla employee, was unwise enough to say, "Well, let me try it again." And then he smashed another window, and it broke. That was a little embarrassing. But even after all that, the stock continues to do what it does, and it's because Elon Musk is a rock star. He's a celebrity, and he talks, and a lot of people believe it. And you know what? For all I know, he's right and they're right, and I'm wrong. I can just tell you, I'm going to stay in my methodology. I'm going to stay in my process. When I value Tesla, it is grossly overpriced. It is priced way too high because I price it as a car company. Silly me. Silly me to think, oh, they sell cars, so I think it's a car company. I think it's overpriced by 73%. I mean, that's like huge. And I think it's higher risk company because they're now seeing a lot of competition. And the competitors have been around for a long time. These competitors like Toyota, uh, Honda, GM, Ford, Mercedes, they've been around for 100 years. They know how to make cars. They know how to make good cars. They know how to handle their distribution. They know how to partner with governments. All those things. They have very strong competitors. So I think the Tesla is a losing proposition. I don't invest in it anymore. I used to be an investor, well before they were this size. And glad I was an investor. I thought, what they were doing was quite interesting. And no longer am I an investor. I'm an investor instead of in Tesla, in Uber. And Uber is benefiting greatly today from the market's, I guess, initial response to the Tesla news that, boy, Tesla's so far behind. I think the investing community now understands Uber using the Waymo technology has a clear path to robotaxi. Uber has, I don't know how many monthly active users, but it's massive. It's number one. That network of ride hailers, that's where the value is for Uber. The experience on the app and the experience in using Uber, that's where the value is. So, as we look at Uber, when I look at Uber, I think it's a fantastic company. I own Uber. I think it's part of the future. It's going to be a company that I do think is going to double in price, double in value over the next 5 years. I think they're going to continue to expand much faster than competing solutions. Right now, I think Uber is fairly priced. I'm not buying additional shares. I own a good amount of Uber. And Uber is an industrial stock. I love thinking about them as an industrial stock. I always think industrial is like old school. But I own $88,000 at Uber. I'm good holding my shares. If I ever see Uber drop more than 2%, I buy shares automatically. Boom. On that day, boom, buy them. Doubled my money. I think I'm going to double my money again, probably over the next 2 years. I just want to see they're going to do their earnings on the 31st, Halloween. And they're probably going to announce after the market closes, but it could be before. I think they announced before the market opened last time, and it threw me off because I'm like, wait, they're a West Coast company. Why are they announcing ahead of the market open? But they did. So for all I know, they're going to announce before. Analysts love their earnings per share. I do too. But when I look at their free cash flows, it kind of brings down the valuation. I'm good holding $88,000 in a relatively young company. And like in proportion, right? Like Meta, I own 200 and some odd thousand. That's a more mature, well-known company. That's why I'm willing to put so much capital into Meta or Google Alphabet. This one here, it's like, okay, if you can keep doing what you're doing, keep being solid, I'll keep putting capital into the stock. But I'm a dollar cost average investor, and I invest over time. I analyze companies at least twice a quarter to see how they're doing, make sure I understand, that the stock is on the same path that I believed was the investing story that I bought into. And so far, Uber's just been spot on. So this is interesting to see that the market is processing what Tesla announced yesterday and saying, we don't believe in Tesla for robotaxi. We believe in Uber for robotaxi. So good stuff. Okay, so let's bring it down to industrials. Fastenal up 6%. Well done. Nice industrial stock. Let me say hello to some people that joined. Impulsive Hamwich. China's been on a wild ride. I agree. I believe it's down substantially today. I'll take a look in a minute. And then Yogi. So you're thinking BlackRock is saying that there were the Democrats, if Trump gets elected, they may have problems. Yeah, that might be the case. I also saw that the CEO of JP Morgan, what did he say? Denied. I guess some story was being floated that JP Morgan or Jamie Dimon, the CEO of JP Morgan, had endorsed the Republican candidate, and they were like, no, we didn't do that. So I think they want to stay out of the controversy and kind of, not be impartial that way. Whoever wins isn't going to be mad at JP Morgan. So, all right. So, okay. So let's keep rolling. Fastenal, let's take a look at this company. I've looked at this company, over the years, and it's great to see them do well. It's an industrial stock. It's up 142%, 40 billion. And what I like seeing is when a company like Fastenal reports well, it's like another indication that the economy is in a good place. Industrial stocks tell us, how's the economy doing? Industrial stocks sell materials, items, pieces that go into products. In case of Fastenal, they do fasteners, and they supply manufacturers with fasteners. You find them at Home Depot. When you're working on your house, you'll find a lot of Fastenal products. You find them in automotive. You find them in machinery, all that good stuff. So it's a really, really good, blue collar, real good company. $40 billion market cap, revenue $7.5 billion. They do have a high PE for an industrial stock at 34. That is a high PE. Dividends okay. They're fairly priced. I think where it always breaks down for me is that I look at their free cash flow, and I haven't looked at this stock in a long time. I didn't even look at it this morning, but you see that their free cash flow is not very dynamic. Like in 2020, they were 933 million, went down to 600, up to 767, 1.2, and then, this number. The best I can do is like a $20 billion valuation for this company, and they're 42. Now, I just showed you Uber. Obviously, like Uber is like kind of blazing trails into the future. Fastenal is really supporting traditional businesses, legacy businesses, manufacturing businesses. I root for Fastenal. I want Fastenal to do well. I just kind of base, should I invest in Uber or should I invest in Fastenal Uber? I'd rather go into companies that have a really good grasp on future versus traditional industries. Although Fastenal has been an awesome performing stock, if you own Fastenal, congratulations. Really solid company, 31%, but it did kind of come down substantially. It went from $78 a share all the way down to $62 a share. So that was a pretty good haircut. That was like a 25% decrement, but then it's really rised. And today it's having a great day. So congratulations, Fastenal. Congratulations, Fastenal stockholders. That looks awesome. A comparable company that I own to Fastenal is 3M. And 3M has been phenomenal. I'm going to hold that stock. I bought it at the right time. I've done really well with it. That is my industrial stock that looks like Fastenal it's in some respects. It's bigger than Fastenal, probably more recognized than Fastenal. But I root for companies like Fastenal. I root for the United States. I root for our economy. So these guys are a good representation of that really important manufacturing complex within the U.S. And they do international stuff. They sell their stuff where manufacturing is getting done. So congratulations, Fastenal. All right, so let's take a look at the market. What is going on stock market? Now it's all green across the board. See, these are good. It's going to be a nice Friday. Nice, smooth. Coffee's good. Market's up. Weekend is on the horizon. This is how it should be. I'll probably, take my wife out to lunch today, have a nice lunch, and just watch my portfolio go up in value. That's what's cool about being an investor is when you get up and you see the market open. We've been open for coming up on an hour, and you see green on the screen. You're like, cool. I don't know how much money I made, but I made money. Trader Prad just joined, and he makes money trading, which is awesome. I saw his live stream last night. It was very good. He doesn't live stream tonight. He might live stream on Sunday, but I really enjoyed what he had to say. He's had an interesting week because of all the volatility. For me as a long-term investor, especially long-term, appreciation cycles like the one we've been on is it's pretty cool to see your portfolio go up hundreds of thousands of dollars for 2 years consecutively. I've done really, really well over the last 2 years, and that's long-term investing. You buy when the buying is good, like down here in 2022, buy. You have to have the internal fortitude to know, I know Meta is going to do well. I know this company is going to do well. And you're going to be wrong some of the times. Sometimes you're going to pick a stock and it freaking doesn't work and you get out of it. But if 7 or 8 other stocks that you pick do work, those are going to really, really reward you. And overall, you're going to make a greater return than playing it safe. So all investors, especially the younger investors, just understand that you want to be in stocks that are going to grow faster, that are going to appreciate faster, that are going to double in value much quicker. That way you can compound your money. So you can start with 100 grand and then wake up 20 years later with $2 million by continuing to put money into your portfolio. But more importantly is investing in the right ways so you can keep doubling that capital. Every time you double, you have just expanded your portfolio massively, and you create, of course, the economic stability and freedom that you want. You can buy stuff you want to buy. You can invest in more things, invest bigger. And that's the journey you're on. You just got to pay the price of learning to be a better investor, picking the right places where you know more than the average investor. Pick industries that you've worked in, or maybe your family has been involved in that you're interested in. Hey, I really like this particular thing. Okay, great. Chase that interest level because you're going to have a knowledge advantage versus the rest of the field. And you're going to probably um, you're probably going to be more motivated in things that you find interesting. So I don't invest across the board on every sector. No, there's some sectors that I know enough where I'm like, I don't like that sector. I'm out. I don't like that industry. I'm out. And there's some industries that are like, I just don't get them. I don't understand them. So I don't invest in those. I try to go to industries that I really understand and I'm really excited about. And that way I can learn the most and become a better investor in the process, which results in bigger, bigger appreciation rates, more money in my portfolio, more money to provide my family, more money to have in my portfolio, and have economic freedom. So that's the journey I'm on, and I invite you to join me in that journey. And Kiter, thanks for joining. Great seeing you. And let's chat. Get on Discord. Let's talk about what's going on. Today's going to be a pleasant day in the stock market with stocks going up. Looks like the old school stocks are going to have the day with banks doing well, Fastenal doing well. So get on Discord if you want to talk with the community. If you want to talk other ways, I'm also on X. It's in the details of the live stream if you want to find my details there. And if you want to upgrade, your experience within the community, I encourage you to be a community sponsor. 3 levels, $10, $25, $100. $10, I could see you on the chat. It highlights your name, so I can really focus on those questions. Advanced investor, you get everything that you get from the value investor, but then you get access to that weekly conference call. And the last conference call we had on Sunday was excellent. We really did a deep dive and we can talk, right? As opposed to a live stream where it's one way, one direction communication along with some chat feedback. And you also are going to get access to the workshops where we're just going to roll up our sleeves and value companies and see how we can find, what's going on with the company. That way we have both the story they talk about, but also the story the numbers are saying. If you want to be a super investor, you want time with me one-on-one, that's an option. And that's $99, $100 a month. And you get all the perks, everything possible. Also share my portfolio with you, my daily trades and my buy and sell list. I'll publish to you weekly. None of this is ever financial advice. It's just information that I hope you take into your learning process. So consider that. I'd really appreciate it. It'd be great to have everybody who's on the live stream be a member. Mike, the dividend investor guy. You've said before, So I like Broadcom. I've been an investor in Broadcom. I made money on Broadcom. I don't like their current stock price. Stock price is not the company. The company is not the stock price. Broadcom started their business, I'm going to guesstimate 30 years ago, and they started their business within 8 miles of where I live. I've known of the company. I root for the company. It's a great company, but Broadcom, their stock price is like, it's priced for just incredible growth. So $843 billion. And I believe that semiconductor is sick. I'm not sharing my screen. 1 second. I'm just talking to myself. So we're looking at Broadcom just real quick. They're doing 843 billion market cap. Revenue is 46 billion. So 20 times revenue. This is a cyclical industry. It will be right now they're seeing a data center build out, but I'm going to show you their revenue, and I'm not seeing, like, if you look at their appreciation, 100%, you look at this appreciation, 550. I bought into Broadcom And then I exited Broadcom at the end of 23. So around here. Okay. So I made money and then it took off. I already thought it was overpriced back here. I'm like, what is going on? This is a cyclical industry. And when you look at their revenue, the revenue is expanding, but it's going to be cyclical. That's my belief. I've invested in semiconductor for 25 years. I've seen the cyclicality of this industry. And I think the cyclicality is going to show up. We'll see how soon. And when it does, I think it's going to be painful for Broadcom stockholders. And I could be wrong. But at this rate, Broadcom used to be a high dividend payer, like 4 or 5%, but their stock price has gotten so expensive, it's down to 1. Earnings per share, it just keeps getting repriced by analysts. And it's just a big group think around semiconductor. We'll see. We'll see. I could be wrong. I could be right. Time will tell. And so, again, I like Broadcom as a company. I think they're awesome. Just their stock price has just been so darn high. It's like, holy smokes. How is Broadcom, semiconductors, the reason they're cyclical, it's common sense, right? You buy a chipset, like my phone, I don't know how long I've had it. I'm going to say 6 years. I've got multiple computers, but in this room that I'm in, I've got 3 computers. The computer I'm on, I just bought, and I bought it specifically for the channel, so I can do streaming and stuff. My laptop I've had for a year and a half, and the laptop I had before, I had for like 6 years. And where I want to go is technology lasts. It's not like I bought an item that I use over the course of a month and I have to replenish. That would be a subscription like Netflix. Okay, I paid my Netflix subscription and then a month passes and I have to pay it again. That's reoccurring revenue. That's not the semiconductor space. Semiconductor space is, okay, we're going to sell a bunch of products. Customers have them. Customers have that product. They get value from it and they keep it for a long time. And that's why you have downturns in their businesses. Hey, all the consumers of your technology are good for the next couple of years. You're going to have lower revenues. When we hit that, I don't know. The other thing that you're seeing in the growth numbers for Broadcom is the acquisition of VMware. And that's a software company. They want to be in the recurring revenue business. That's why they acquired VMware. So you're not seeing organic growth. You're seeing acquisitive growth. Very different. I think it's fine that they acquired VMware, but acquisitive growth is not as good and desirable as organic growth. Organic growth like Uber, that's organic. That's more customers buying the same product you sold 5 years ago. That shows that your product or service is very good. Broadcom, they acquired VMware. It's a different animal altogether. So I appreciate you bringing up Broadcom. And Mike, if you buy Broadcom, I hope you make a ton of money. But I'm just going to always share how I see things. And I hope everybody else does the same. If you disagree with me, please share it. I'll take it in and I'll commit to taking information as what it is. Good information, good observation from another investor. And together, I think if we hear 10 opinions on a particular stock, we're going to be better for it. Even if some of those opinions are completely different than the opinions we have about a stock, it probably might cause us to pause and kind of reconsider, okay, am I looking at everything correctly? So I encourage you to keep bringing the feedback. Good stuff. All right, everybody. So we've had a good stream. Stock market continues on its path, its green path. Looks like St. Patrick's Day. It's a beautiful green day. Thank you, stock market. This is how I want to end the week. Nice big appreciation. And I'll right into the weekend, do some more analysis. I'm going to do a stream tomorrow with Scott's due diligence, and Scott is brilliant. I look forward to catching up with him. I invite you to it. It's going to be tomorrow. It's going to be midday Eastern, and I forgot the exact time. So look at the channel and see if you can make it. It'd be great to have you. And then on Sunday, all members will have our conference call. Looking forward to that. And if you have a topic, members, that you want to discuss on Sunday, you can email it to me in advance, or you can show up the day of and put it on the board. And unless we have a ton of, many topics, I'm sure we can probably handle it. So everybody, thanks for tuning in. I really appreciate it. It's been a good week overall. Looks like I'm going to have a green week. I'm doing well in October. I'm in the green in October. And I thought when we started October tends to be a bad month historically. So if I make it through making money in October, I'm okay with that. I made it through September. It was a very good month. And again, September historically could be a bad month. So when I made it through September, it kind of felt like I walked through a minefield, and I got to the other side with a lot more money in my pockets. And right now, I'm not saying October is going to be the same, but if I'm sitting here on October 11th with money in my pockets from the gains I've had so far this month, I'm good with that. And I appreciate it. So everybody have a nice day. Have a terrific weekend. And again, thank you for tuning in.